Hello, everybody. Thank you so much for joining us today. We really appreciate you taking the time out to talk all things solar financing with us. We've got three presenters today, a nice mix of people for you to learn all things solar financing through. We've got James, Andy, and Richard. If we do introductions, guys, and then I'll hand over to James to get started, if that's okay. One sort of caveat to point out too, we are recording this, so after this webinar is finished, we'll send you out the recording in full and you can pass it on to anybody who was unable to attend today. And we're going to do questions at the end if we can as well, please, guys. So there should be a Q&A box at the bottom of your screen. Type in any questions you've got as we go through, and then the guys will answer that as we round up the session. Lovely stuff. James, should we start with you?
Yeah, hi guys. Thank you so much for joining. Really excited to talk you through our commercial financing product. So my name is James Walker. I head up Segen Finance over here at Segen, and I'm joined by our partners here at BNP Paribas, Andy and Richard, who I'll let introduce themselves now.
Okay, first, yeah, Andy Milsom. So my role within BNP Paribas Leasing Solutions is training. And that covers business finance generally, although obviously majoring on leasing and asset finance. Today's not really a training session, though. It's more an introduction to the products and the way we're going to be doing business.
Thanks, Andy. I'm Richard. I'm the external relationship manager for all things renewables. So my job is to set up new relationships with partners in the UK and embed financing into their offering.
Brilliant. Thanks so much, guys. So I think the way in which we'd love to run this is to effectively give you guys an overview of financing in the solar world, particularly with regards to hire purchase and the product that we're offering here. And I think the key piece about this is one, to get a good understanding of how solar financing works, but also what our specific product is that we're offering to you guys as installers and as our key customers. So I'll let Andy run through the materials, but please feel free, as George mentioned, just drop any questions into the Q&A chat. We'll be more than happy to answer those after we finish through the presentation. Additionally, please feel free to reach out with any questions after the fact. If you have any further questions, we'll also be happy to set up other calls to run through more detailed points as and when you need. But without further ado, I will pass over to Andy, who will run us through the presentation. Thanks very much.
Thanks, James. So you've introduced the session well, so let's move on to it. So the way we're structuring this, it's a pretty short presentation. First of all, just looking at what the benefits of offering asset finance to your customers are, so to you as the installers. So we'll run through those, and then look more specifically at the product that's on offer, the finance products that's on offer on this scheme, what it is, and how the relationship between Segen and BNP Paribas Leasing Solutions will work. So benefits of asset finance and leasing, probably just to set the scene a little bit, is worth saying what the sort of size of the market is and how it's worked on a global scale. So I think over about the last 12 months, or over the last 12 months, about £40 billion worth of asset finance transacted in the UK, which is a huge amount of money. It's grown well over the last 10 to 15 years. And certainly if you look at the rate of growth as far as asset finance is concerned and compare that to the growth rate of the economy as a whole, then it's quite clear that asset finance is being increasing in popularity as a means of funding capital equipment. I think the latest estimate is about 35% of all capital investment is by way of an asset finance or lease agreement. So the key thing to take on board there really is that a lot of your customers that you'll be talking to will be leasing or having hire purchase agreements for vehicles, plant machinery, and office equipment. So you won't be necessarily introducing anything that's completely new to them. So that's an important thing to take on board. Just in terms of why asset finance and leasing has grown over the last few years, I think there's a couple of things that's worked very much in our favour. I think firstly, the whole idea of subscription and pay for use has become much more entrenched in the way we do things. just from our own personal lives. We subscribe to Netflix, Now TV, Spotify, mobile phone contracts, and increasingly vehicles as well, cars. I mean, cars were, one asset that people just wanted to own. Go to the bank, borrow money and buy a car, or if they were lucky enough to have the cash, pay outright for it. But now cars are pretty well treated like mobile phones for a lot of us. We'll keep a car for about 3 years, hand it in and get another one. So just generally the whole idea of pay for use has become much more entrenched in the way we do things. So that's important. And the reason for that largely, I think, is just the rate at which technology is changing. And certainly that applies to capital equipment. If people buy equipment outright, the real logic behind doing that is they're going to keep it for a long period of time. If you want the flexibility to change equipment as technology changes, then leasing and asset finance provides that flexibility. So that just gives you a bit of an overview. If we now look at the benefits to the installer, you'll see a few things on the slide there. I just asked Richard just to say a little bit about the first one there, about the total solutions provider and what that represents.
Thanks, Andy. So Segen have partnered with BNP Paribas to offer a captive finance product. So that's a value add to the installers. And effectively, what it enables you to do is offer a kind of frictionless route to finance to your customers. So it's really easy to set up. Approvals can be achieved in seconds by using the online portal, by putting in some very basic information such as company registration number, value of the deployment and the term. And as I say, you can often get an instant decision for the customer. It doesn't affect their existing credit lines. The offering in terms of market competitiveness, Segen squeezed us quite hard on the pricing. So we're rolling this program out all across Europe. So it's very, very market competitive. There's no cash outlay for the installers. Once it's credit cleared, once the deployment begins, we pay Segen directly for the hardware element. And then when the deployment's completed, we pay the installer for the install element of it. We can fund the complete deployment, so it's not just the hardware. So it's installation, things like scaffolding, cabling, the cost of man hours. So it's a totally encompassing product offering. And it's something that we're used to offering to many different partners who want that captive approach. So just to name check some of the programs that we currently run. So we run the Apple program. We offer Microsoft financing, SAP financing, Dyson financing. We've got other large customers in terms of organisations like Nidec, E.ON, Scottish and Southern Energy. So these are all businesses that have partnered with us because of our experience in the market and our ability to transact deals really, really quickly, low friction. Everybody gets paid very, very quickly. And, we've got some very, very happy customers.
Yeah, I think just to add to what Richard said there, I think that the easiest way to view it from your point of view is you can see it almost as an extension of credit. This won't impact your Segen credit limit that you have with us already, but you won't have to outlay any payment on the hardware because the bank will be paying us directly for that. You're still able to make your markup on the hardware that you typically do, and as well as be paid for the installation labor element of things directly by the bank. And their payment is, as Rich said, it's very quick. It's within sort of 48 hours of completion. So it's sort of as a win-win-win for all parties involved.
Thanks, James. And just to add to that, James and I are available to support any deals that you've got that you're currently working on, whether you need us to speak directly to the customer, we want some advice, you want some help with the terms and conditions, on the process flow, we're all there to support you.
Thanks, guys. Yeah. Some of those messages will come through again, actually, in various other points that I make during the next few minutes. But just working through the slide there, one that probably needs quite a bit of emphasis is it's entitled there, no need to squeeze your margin. I mean, there's no doubt about it. Anyone who is selling equipment on finance tends to have higher order values and less prone to being asked for large discounts. So very simply, I mean, if you had an installation, solar panels costing £100,000, and you could offer that equipment on finance for, say, £2,000 a month over 5 years, if the starting price to the customer is £2,000 a month, you're much less likely to get asked for a discount than if your starting price is £100,000. It's just psychology. It's just a much bigger number that has that sharp intake of breath sometimes. 100,000, whereas £2,000 a month seems a lot more affordable. The key to this, though, is lead with an asset finance price. People that are most successful at selling equipment on finance just tend to just use a monthly cost as a normal way of giving the customer a price. Takes a bit of getting used to, but once people do it, they find it has huge benefit. Some of this we made reference to, or Richard made reference to already. I mean, if you're selling for cash, the odds are you're going to have to take a bit of time to actually get paid, whereas leasing companies such as ours, we're actually targeted to get money out the door as fast as possible. It's what basically pays our wages, is paying suppliers for equipment, and we need to do that fairly quickly. It's one of our key service requirements. Available for all sizes and type of deal. Well, the only limiting factor really is credit. And if the credit's right, we can do any deal from £1,000 to upwards of £1 million. Obviously, the higher up scale you get, the credit becomes a little bit more complicated. But certainly for your average deal sizes, that's our kind of food and drink, really, in terms of what we're doing repeatedly. Ease to use finance products. We're keeping it really simple. The product that you'll be offered is hire purchase. It is the most popular product within the asset finance and leasing industry, so it's one again that customers are going to be fairly familiar with, and it's pretty simple. No complication about what happens at the end of the term. When the agreement ends, the customer owns the equipment. It's as simple as that. Removing the hassle. Well, once a deal's been accepted by us, the equipment's installed, then getting money from the customer and dealing with the customer inquiries relating to payment becomes our responsibility. So that removes potential hassle from yourselves. Probably Richard or one of the colleagues here might want to say just a little bit about the hardware provided free of any payment. I'm not as familiar with that as some of the other guys in terms of what the real benefit is on that one. So if one of you guys would like to just step in there, that'd be good.
Sure, Andy. Yeah, so instead of the installer purchasing the assets directly from Segen using their credit line, effectively there's no cash outlay, because once the hire agreement's signed, we pay Segen directly immediately for the hardware element.
Yeah.
So that the kind of installer's credit facility remains untouched because we've paid Segen directly, and typically that represents kind of 50 to 60% of the deployment cost. So it's a big benefit.
Yeah, okay, get that. And then the final one on this slide is the terms that Segen Finance are able to offer. So we can do terms up to 10 years, minimum term of 2, but up to 10 years, which is, outside of the norm for a lot of the products finance. So there's a lot of flexibility there. And the rates for the equipment being supplied are competitive in the market. So you're looking at APRs of 8.5% to 9.5%. So they're the main benefits as far as the installer is concerned. If we now go to benefits to the end user, so one of the main reasons users like acquiring equipment on finance is because it gives them the opportunity to buy what they actually need rather than what they can afford. If you're paying cash for a piece of equipment, the limiting factor tends to be how much is available in the budget at the time you take the equipment. Obviously, when you're breaking the cost of that equipment down to monthly costs over a long period of time, then much more chance for the customer to get what they really need rather than what they can afford, because they can afford more, basically. So that's an important element in terms of driving customers towards leasing and asset finance. The one-stop shop, I probably don't need to say much more about that already, because I think Richard covered that as a benefit to you as an installer, but there's also a real benefit to the customer in just having that one agreement to pay for everything that's involved in the deal, just one payment every month to Segen Finance. Preserves cash in the business. That is another really important driver of businesses going for leasing and asset finance rather than paying cash. In very simple terms, the average return on capital that UK businesses generate at the moment is about 12.5%. Now, it's going to vary hugely depending on the type of business you're looking at. But if you just take an average business, it's making a 12.5% return on capital. It's then offered a finance deal, say the Segen Finance APRs of 8.5 to 9.5%. In very simple terms, if you can use any cash you've got to invest in your business and get a 12.5% return, and the cost of a finance agreement is 9%, say, then it makes absolute sense to take out a lease or an asset finance agreement at 9% and invest your cash in your business and get a return of 12.5%. It's a complicated concept, but in very simple terms, that is what businesses do, and why cash-rich businesses will take out leases, go to the bank and borrow money, even though they've got plenty of money to actually buy the assets they want outright if they chose to do so. The three items on the bottom of your slide: faster return on investment, fixed payments, and the tax allowances. I'm just going to cover off with 3 slides coming up now. So first of all, a faster return on investment. Again, another powerful reason why finance directors particularly like leasing and asset finance. So the example I've got here is a deal value, solar panels costing £100,000, including the installation. 2 ways of funding that: you either pay cash or you take out a hire purchase agreement at £6,100 a quarter, which is what the 5-year agreement would be. To keep it really simple, then the energy saving we've applied to this installation is exactly the same as the payments under the hire purchase agreement. So that's the return the customer is getting on their investment, and that's 24,400 a year as well. So if you look at the little chart on the left hand side as you look at your screen, that's a cash deal, and it's projected over 7 years, the cash going out and the return on investment coming in by way of energy savings. So you've got the initial outlay of £100,000. The customer is going to get a return on that investment of 24,400 a year, but you can see there that it's going to take just over 4 years before the £100,000 that was paid for the equipment gets covered. So they'll make a return over the 7 years, but they won't start making a return until they're 4.5 or 4 and a bit years into the cycle. If, on the other hand, they go the route of hire purchase agreement, then they're effectively making a return immediately. It's costing them absolutely nothing, because they're paying 24,400 on day one, and they're getting a £24,400 return on that investment on day one, and that will take, obviously follow right through. And when the equipment, after 5 years, the equipment ownership of the equipment passes to the customer, and they make no more payments, but they're still obviously getting the return on that investment. So speed of investment, speed of covering your cost is a is a key factor in driving a company towards leasing. The other thing that leasing's got going for it is the fact it's a fixed price contract. Now, the real benefits in a fixed price contract, because when you're committing to pay a certain sum of money in 2, 3, 4, 5 years' time, whatever it might be, when you actually pay that money, it's going to be worth less in real terms than it's worth now. Accountants use something called present value to work out what and future value to work out what payments in the future will be worth in real terms. But one of the factors they build into that is the rate of inflation. So just a simple slide here showing effectively what will happen to £1,000 value now, what will happen to it in 1, 2, 3, 4, 5 years time with different rates of inflation. Now, if you heard the news this morning, I think you probably would have picked up that inflation, the latest inflation figures were published, and they were in the UK 3.8%. So we're pretty close to 4% at the moment. And at 4%, you can see there that money is losing value at about £40 a year. So in 5 years' time, you sign someone up on a 5-year hire purchase agreement. They're paying £1,000 a month. But in 5 years' time, given a consistent rate of inflation of 4%, then in real terms, that rental payment comes down to £822. So a fixed price contract, when you take inflation into account, becomes a pretty good deal, and is an important factor that finance directors build into an asset finance v cash calculation. The other one was tax. Now, this is a very sort of high level slide, really. I mean, and it's subject to, or could be subject to quite a lot more explanation. I'll be able to give it today. There is a little note there at the bottom that says that we're not qualified to give tax advice. And the last one I would recommend anyone selling equipment to do is to go out and start talking in any detail about tax. Really one for the customer to talk to their own accountants about. Having said that, there are some general things that apply that certainly worth knowing about. And the most important of those really is to understand that when people invest in capital equipment such as solar panels, they're able to claim a tax allowance based on 100% of the price of the asset. So the three methods that are in place, and there's really two, I guess, really, but the methods that are in place for claiming capital allowances against tax depend on the rate at which you can make those claims. So the system that's been in place for many, many years is called a writing down allowance. What that basically allows a business to do is just basically write down the cost of the equipment against tax as over the period they're using it effectively, and it's around about 18% a year of the cost of the equipment they can offset against tax each year they're using the equipment. So that's the system that's been in place for a very long time. But over recent years, governments have tried to put in real incentives in place to get businesses to start investing in capital equipment. And they've done that through two schemes, one called an investment allowance and one called full expensing. And in both of those cases, what they're basically allowing customers to do is to claim the full allowance, the full capital allowance against tax in the year they actually acquire the equipment. So that's a pretty powerful incentive, and it's worked quite well in terms of driving extra capital investment over the last few years. With an HP agreement, hire purchase agreement, the customer is also able to claim the interest element on the agreement against tax. So I've got a little example of how that works using that same £100,000 cash deal and comparing it with the £24,400 a year hire purchase deal. So I mean, you could spend a lot of time talking about this slide, but just take the headline figures from it. So outright purchase, customer pays £100,000. They can claim on one of these 100% first year allowance schemes. They can claim 25% of that 100,000 against tax. which brings a net cost after tax down to 75,000. Obviously, no more capital allowances available after that. If you then go to the hire purchase agreement, then the customer is paying £24,400 a year in payments on the agreement. In the first year, though, they're actually in credit because they're getting £25,000 worth of capital allowance, plus they're getting the interest element claimed against tax. Now, the interest at £24,400 a year, the interest element on that is £4,400. So if you're paying tax at 25%, there's a £1,100 allowance just on the rental payments. So in the first year, you've got the £26,100 worth of allowance from the tax office, and that effectively brings the cost of the equipment in the first year down to nothing. So that's a pretty powerful incentive to invest. Thereafter, obviously, you've had your capital allowance, but you're still getting the £1,100 tax allowance on the interest element. So the key thing on that the £100,000 you spend when you buy the equipment outright comes down to 75,000, and the 122,000 you pay on HP comes down by £30,500. So that just gives you an idea, when you take tax into account, how again the real cost of a lease or asset finance agreement will come down quite considerably. And of course, you've got the other things like the return on cash you get by keeping cash in the business, and the inflation element that also builds into that. And in many cases, when that full calculation is done by a finance director, they will find that hire purchase is actually cheaper than outright purchase when you take all those elements into account: tax, inflation, return on cash. But that's the subject of another presentation. So moving on to the product itself. So I think we said a little bit about this. We are the finance partner, BNP Paribas Leasing Solution, and it's a relationship between the two companies that provide the products and the service you've got. So the hire purchase are key facts. First of all, the hire purchase agreement, the user gets to own the asset at the end of the agreement. VAT on the cost of the price of the asset is normally paid up front on one of these agreements, and no VAT is payable on instalments thereafter. And with solar installations, VAT can also be claimed back by the customer from HMRC. So how do you become an approved supplier of the Segen Finance product? Starting point is to reach out to your Segen account manager, sales manager, and let them know you're interested in offering finance. We'll then conduct a thorough due diligence on the business. I mean, you'll be aware from the news that finance is very much under the spotlight in terms of the way finance is sold. So you've had the PPR, and now you've got the issue around commission on car finance deals. So it is a pretty heavily regulated business. That means that there is a need to do due diligence before people are authorized to go out and sell finance. Having gone through that, it's then a case of signing a trading agreement, and that will just outline the terms of trading between yourselves and Segen Finance, BNP Paribas, and the obligations on both parties. Once that's been signed, effectively everything's really in place to go, other than the fact we do anticipate that there will be a need to do proper training, which this isn't, in terms of the product and I suppose more importantly, how to actually deal with us, how to submit proposals, how to access our online systems to get instant decisions, understand where different leases are as far as your customers are concerned, all the information you might need. Once you've got that, really, you're all set to go, and you can start offering finance to your customers. So just really concluding then my bit. So the customer hires the equipment. The financial product is a hire purchase agreement. They make their final payment, and after that, the ownership of the equipment passes to them. Interest rates between 8.5% and 9.5% APR. Terms up to 10 years, with an ability to actually extend to 15 in certain circumstances. So that really does give you some flexibility on pricing. In terms of how quickly can you expect a decision? Well, if you propose deals, as we anticipate you will, on our portal, on our online portal, in many cases you'll get an instant decision. There's an automatic acceptance criteria built into the system, and if that doesn't happen and the extra information is needed to be reviewed by one of the underwriters, then we're looking at still getting your decision within 24 hours maximum time. And split payments are available. We can pay, or will pay, and I think Richard said this at the outset, we'll pay Segen directly for the hardware and you as the installer for the installation. And in certain cases, we can offer stage payments for more complicated installations. So that concludes my bit. I'll sort of hand it back to George and James to.
Brilliant. Yeah, thanks so much, Andy. That's been really insightful. And I think it's a really good overview as to what hire purchase is, how it can benefit companies, and also how you as an installer can offer this product to your customers. I know we've sort of overrun a little bit, but I think there's probably a bit of time for some Q&A. If anyone wants to write into the chat, I can see there's one there from Dave about being a limited company or a sole trader. So I guess just to ask that one briefly, you'd have to be a limited company as an installer to offer this product. As a sole trader, offering financing becomes a regulated part of the finance offering piece there. So you'd have to be regulated under the FCA as a sole trader to offer financing. Whereas as a limited company, you're able to offer this commercial financing product, given it is unregulated. I think if there are any other questions, please feel free to reach out to myself directly. I'd be very happy to answer those questions. As we said, we'd be more than happy to set up further sessions to go through some more detailed questions. I believe George is also going to send around the slides recording after this. So please feel free to reach out directly to myself or Richard or George for any further questions. Sorry, Chris, one last question there. This is a commercial only financing product at the moment. Something that we are investigating as a finance department at Segen is the ability to offer residential financing, but that is something that will potentially come later, probably next year at this point, but it is something that we're investigating at the moment. Yes, on that point there, David, around software that you use to work out costings. So part of the bank's portal will be able to give out the monthly installment, the monthly payment that end users will be paying on any given finance arrangement. Something that we are building internally at Segen is a payback calculator as part of a new designer tool that we're developing, and how we incorporate finance calculations within that. So that would take into account electricity savings as well as finance payments over the course of 5-10 year piece, and that's due to come out next year as well. So watch this space, I would say, on that question there. One more question from Matt. If a customer already has multiple asset finance packages in place. So I'd probably pass that one over to Rich, because that seems to be more of a bank-related question. But I understand as long as the customer has healthy credit, then they'd be able to take out another financing arrangement. But Rich, I'll pass that one over to you. Question from Matt Green in the Q&A section.
So this is to do if they've already got numerous existing finance arrangements.
Yeah.
I mean, I think we mentioned this earlier on in the slide deck, that you'll normally find that the customers that you're talking to will have numerous assets on finance. So they'll have office equipment on finance, they'll have vehicles on finance, they may have materials handling on finance, and they're normally with lots of different finance providers. So as long as they pay their bills on time, it's a good indication that that they're credit worthy. So it's not it doesn't stop you adding another finance agreement. Was that the question,
Yeah,
James?
exactly. It's basically, it comes down to the credit worthiness of the end
Yeah.
user. So there's no real limit, I guess, if they're happily paying off those payments. Another one from David on what sort of job value would you give in terms of stage payment? So I mean, the stage payment element is done on a case-by-case basis. So as sort of mentioned, the hardware element is paid directly to us, which can be sort of 30 to 40% of a solar installation cost. But if it's a particularly large project, there can be, as part of the negotiation, stage payments. So you may get an additional 20% upfront to help with labor and scaffolding, with the final 30 to 40% paid on completion, which can help with working capital arrangement. But that it's very much done on a case-by-case basis. So I guess the real answer there is, just when inquiring, make it known that stage payments would be something that you'd be interested in looking at, and we can take it from there.
Perfect. Okay. If there's no more questions, cheers, David. Thank you very much. Thank you very much. If there's no more questions, we will wrap it up there, guys. Thank you so much again to James, Andy, and Richard for joining us today. Thank you for joining us this morning as well. We appreciate it. Everyone's got very busy schedules. Thank you so much for taking the time. James said we'll circulate this webinar out to everybody as a recording, so you can watch back on any of the points raised today as well. But yeah, thank you very much, guys.
Thanks, guys.
Thank you.